Eamon Javers for some details on White House efforts regarding the oil industry and supply. Eamon?
Yeah, John, we're expecting that big oil CEO meeting at the White House tomorrow. I've been talking with an oil industry source over the past little while who gives me an expectation of what the industry, or at least some of the players in the industry, are going to be asking for from the president. And the main thing is this issue of oil tariffs, which some players in the industry believe the president is inclined to do here, even with this announcement in the past hour or so on a potential deal with the Saudis and the Russians. They're concerned about that. So a number of the players in the meeting tomorrow are expected to argue to the president that tariffs are, in fact, a bad idea. They're going to also argue for royalty and leasing relief for drilling on federal lands and for storing excess reserves in the Strategic Petroleum Reserve. That's something that the DOE, Department of Energy, is examining now. Also, Jones Act waivers. That's the law that mandates that if you're shipping between U.S. ports, you have to use American ships. That drives up costs. We can expect that they might make a push for that one as well. And last night, two of the big oil trade groups, the American Fuel and Petrochemical Manufacturers and the American Petroleum Industry, sent a joint letter to the president making the case against tariffs here, saying American families have benefited mightily from American energy dominance in the form of plentiful oil supply and affordability. Taking steps to restrict that supply could jeopardize these gains. So some folks in the oil industry not liking the idea of tariffs, but I'm told that one of the big proponents of the idea of tariffs is Harold Hamm, the billionaire oil entrepreneur, who, of course, is a close friend of the president, has the president's ear. One oil industry source telling me that Harold Hamm does like the idea of higher prices because the smaller players simply can't make money at the prices where we're at right now, guys.